The dawn of digital currency. Cryptocurrency, particularly Bitcoin, is a groundbreaking innovation that has revolutionized the financial world. The idea of a decentralized digital currency came in response to issues with traditional financial systems. In 2008, the global financial crisis exposed the inefficiencies and corruption within the banking industry, leading many to seek alternatives to traditional currencies. In this context, an anonymous figure or group known as Satoshi Nakamoto introduced Bitcoin. Nakamoto's vision was clear: create a peer-to-peer digital currency that operates independently of central banks and governments. Bitcoin's key feature was the ability to transfer money directly between individuals without relying on banks or intermediaries. In 2009, Nakamoto released the Bitcoin software and mined the first block, marking the start of Bitcoin's journey to challenge traditional financial systems. The early days of Bitcoin. Bitcoin's early days were humble, with limited recognition and value. The first known Bitcoin transaction happened in 2010, when Laszlo Hanyecz, a programmer, purchased 2 pizzas for 10,000 Bitcoins, which were worth about $41 at that time. Years later, those 10,000 Bitcoins would be worth millions, illustrating Bitcoin's incredible volatility. Initially, Bitcoin was confined to a small circle of tech enthusiasts and cryptography fans. The currency's decentralized nature appealed to those who distrusted traditional financial institutions. However, Bitcoin was largely ignored by the public and dismissed by mainstream financial institutions. Despite the skepticism, Bitcoin gradually gained traction among niche online communities. As more people experimented with Bitcoin, the currency began to grow in prominence. The blockchain technology behind Bitcoin. The breakthrough behind Bitcoin's success lies in its underlying technology, blockchain. Blockchain is a decentralized digital ledger that records all Bitcoin transactions across a network of computers. Unlike centralized systems where a bank controls the records, blockchain is distributed and stored across thousands of computers, making it nearly impossible to alter past transactions. Bitcoin transactions are verified through a process called mining. In mining, computers solve complex mathematical problems to validate transactions. Once confirmed, a new block is added to the blockchain, making the transaction final. This decentralized system eliminates the need for intermediaries and ensures the transparency and security of each transaction. Blockchain technology has become the foundation for many other cryptocurrencies, such as Ethereum, which expanded upon Bitcoin's model by introducing smart contracts, self-executing contracts with terms written into code, allowing for the creation of decentralized applications, DApps. The growth of cryptocurrency and mainstream adoption. By 2013, Bitcoin's price surged from a few dollars to over $1,000, attracting significant attention. Bitcoin was gaining recognition as a legitimate asset class. As media coverage increased, high-profile tech figures began supporting Bitcoin, and the currency's reputation started to shift from a niche product to a serious financial innovation. This period saw the rise of cryptocurrency exchanges, platforms where users could buy, sell, and trade Bitcoin. These exchanges made it easier for people to acquire Bitcoin, leading to greater liquidity and stability in the market. The success of Bitcoin also led to the creation of alternative cryptocurrencies, known as altcoins. Cryptocurrencies like Litecoin, Ripple, and Ethereum introduced new features, such as faster transaction speeds and the ability to create smart contracts. While Bitcoin remained the dominant cryptocurrency, these altcoins contributed to the growing ecosystem. Despite Bitcoin's rise, it faced significant challenges. One of the main issues was scalability. Bitcoin's network could only process a limited number of transactions per second, causing delays and higher fees during peak periods. This raised concerns about whether Bitcoin could handle widespread adoption. Additionally, governments began to take notice of Bitcoin, especially due to its anonymous nature. Many governments worried about Bitcoin being used for illicit activities, such as money laundering. This led to calls for regulation, although Bitcoin's decentralized nature made it difficult for authorities to control. The cryptocurrency boom and bust. In 2017, the cryptocurrency market experienced explosive growth. Bitcoin's price skyrocketed to nearly $20,000 in December 2017. This surge was driven by a combination of excitement, speculation, and FOMO, fear of missing out, among investors. Bitcoin and other cryptocurrencies were becoming more mainstream, and the market seemed to be on an unstoppable upward trajectory. This boom also led to the rise of initial coin offerings, ICOs. ICOs allowed blockchain startups to raise funds by selling digital tokens to investors. While some ICOs were legitimate, others turned out to be fraudulent, adding to the speculative frenzy. However, the meteoric rise of Bitcoin was followed by a dramatic crash in early 2018. Bitcoin's price plummeted by more than 60%, wiping out billions of dollars in market value. This crash served as a reminder of the volatility inherent in cryptocurrencies. Many investors who joined during the peak saw significant losses. Despite the crash, the fundamentals of Bitcoin and its underlying technology remained strong. Blockchain continued to develop, and the market began to stabilize as the speculative bubble burst. Institutional adoption and the future of cryptocurrency. By the 2020s, Bitcoin saw significant institutional adoption. Major investors, including hedge funds and publicly traded companies, began buying Bitcoin as a hedge against inflation. Companies like MicroStrategy and Tesla made headlines by adding Bitcoin to their balance sheets, lending credibility to the cryptocurrency market. In addition, PayPal, one of the world's largest payment platforms, began offering cryptocurrency services, allowing users to buy, sell, and hold Bitcoin directly within their accounts. This move further legitimized Bitcoin and opened it up to millions of users. Despite its growth, the future of Bitcoin and cryptocurrencies is still uncertain. Some challenges persist, including scalability and regulatory issues. The environmental impact of Bitcoin's energy-intensive mining process has become a major concern, and governments continue to debate how to regulate cryptocurrencies without stifling innovation. Another area of concern is the rise of central bank digital currencies, CBDCs, which are government-backed digital currencies. CBDCs could potentially provide competition to Bitcoin and other cryptocurrencies, especially for everyday transactions. A new era in digital finance. Bitcoin's rise marks the beginning of a new era in digital finance. What started as an experimental project in 2009 has evolved into a global financial phenomenon. Bitcoin has provided a decentralized alternative to traditional financial systems, offering a new way to transfer and store value. As Bitcoin and other cryptocurrencies continue to evolve, they have the potential to disrupt industries beyond just finance. Blockchain technology has applications in supply chain management, healthcare, and even voting systems, showcasing the transformative power of decentralization. While there are still many challenges to overcome, such as scalability and regulation, the future of Bitcoin and cryptocurrency looks promising. Cryptocurrencies are no longer a niche technology but are slowly becoming a mainstream part of the global financial landscape. In the end, Bitcoin and the rise of cryptocurrencies represent a fundamental shift in how we think about money and the role of centralized authorities in our financial lives. As blockchain technology matures and more people and institutions embrace it, cryptocurrencies will continue to shape the future of digital finance.